Hello and welcome to another HFX video. So in today's video, we're going to be talking about how you can lose money in Forex, right? And there's pretty much three main ways you can lose money. There's a couple of other reasons, but to be honest, they all sort of they're all included in the three really. The first way that you can lose money in Forex is over risking. So if we just over risking, right? So when you're trading and you put a high proportion of your account onto one trade and you lose that trade, you're going to lose a lot of money, right? Now, the reason why over risking is so bad is because what usually follows with over risking is the negative emotions, the negative psychology. You've taken a big loss. So now you want to make that loss back, which is going to lead me on to the next way that you lose money in Forex. But let's just focus on this for a minute. So I would say your risk should be, it's what you're comfortable with. Risk is what you're comfortable with. But I would just recommend anywhere between 1 to 3% of your account. That's what I would recommend for beginners. I'd say 3% is still quite a lot, especially if you think you're someone who can, overtrade very easily. Then you could quite easily rack up a, minus 9%. 9% day, right? Which is no good. Okay. So you need to think about your comfortability. If you're someone who overtrades, you need to think about lowering your risk. If you're someone who's doesn't overtrade and is actually very, very patient, very strategic, then maybe you can look to start increasing a little bit of risk. But these are things that you have to do over gradually, okay? I started with 0.5%, then 1%, then I went from there, okay? So it has to be about comfortability. I grew to increase a little bit more at a time. Okay, I got used to that and I got comfortable with risking and losing that much. Okay, it's all about what you're willing to lose, what you're willing to risk. All right, which leads me on to my next point. Once you take your big loss, once you over risk, okay, once you blow a high proportion, you're gonna panic. You're gonna feel really bad. You're gonna have a bad day. And what you're gonna do is you're gonna want to make that money back. So then, what you're gonna do is the second way that you lose money in trading is you're gonna overtrade. Okay, what do I mean by overtrade? I take a buy here, right? And let's just say price comes back into this range and it stops me out. Okay, I'm a stop loss below this current candle, and I had 2%. Okay, now I'm like, damn, price came down and stopped me out, and then I see price come back up bullish again, and I'm like, maybe I was just early, maybe that was just a mistake. I just took a 2% loss on my account. I want to make that loss back. And now you're like, okay, now I don't also want to potentially miss on the move, right? And that's another way that you can lose money, but we're going to go into that. Okay, now I take another buy, right? Same thing happens. Price come back into this range and I'm back in drawdown and potentially get stopped out. Okay, I've taken 2 losses. Now at this point, I'm like, wow, taking 2 losses. You want to call it a day. You don't want to take any more trades. And then wait, you see price coming back up. And now you're like, okay, I can make this loss back. I can make this loss back. So you come and take another buy and the next one comes down and stops you out, right? Over trading. Okay. So what I would say, my recommendation is per session, per trading session, 1 to 2 trades. Okay. Why I say 1 to 2? If you take a win, right? So if you take a win, why not call it a day? Why would you want to give your profits back to the market and take a second trade, right? Why would you want to do that? It doesn't make sense. You've got your profits, you call it a day, you go to the next session, you go again, you do the same thing, right? If you take a second trade after you've won and you lose, now what's going to happen? You're not going to want to finish the day break even or even at a loss. You was in profit. You had that good positive feeling. You took a win. What you going to do? You're going to overtrade. You're going to go and take a third trade. What might you do? You might increase your risk because you think, right, I want to make some profit. I want to guarantee myself some profit. I'm going to put a little bit more risk on it. Okay? No, you don't do that. Why I say 2 trades per session? If you take a loss, you can give your trade a second chance. Okay, what do I mean by that? So if I took a buy, right, once we broke the high over here, once EJ came over, broke the buy, and now I'm gonna stop in the middle of the range, and we see price come back down, and it taps me out. Okay, it stops me out. So if we just move this over, so we got over risking, recommended 1 to 3%, over trading 1 to 2 trades per session. And we're saying if you take a win, why not call it a day? And we're saying you can give your trade a second chance. Okay. So So we come up and it stops me out, right? Why would I next give it a second chance? Well, now at this point, maybe we're going to see something like this happen, right? Maybe this candle's going to come down and it's going to form bearish, but it's going to respect this area. Okay. And then maybe the next candle, right, comes up and starts breaking the highs over here, right? Like this. Okay. And then we've got our, all right, I won't add a bottom wick, but stay. Okay, let's say that we come up and break over the highs. We have a small bottom wick here, something like this. And now we're saying that price is going to go bullish. Okay. So the way that you would give your trade a second chance, is if you got stopped out the first time, now you're waiting for, can we respect this area? So you're waiting for an extra confirmation. We have respected this area because we're forming support at this area and we're coming up to break all the highs. So at that point, you can anticipate price to continue moving bullish. Okay. And that means that you were just early with your buys. Right. That's pretty much it. Okay. So you're giving your trade a second chance. Let's say that you want to give your trade a second chance and this candle comes down, stops you out, and then the next candle comes up like this, but then it wicks down, right? And actually closes something like a weak bullish doji, right? What you gonna do then at this point? Okay, we've got a long wick to the upside, and then we had a little wick coming down, right? We've got a weak doji candle. What are you gonna do? You're gonna call it a day, okay? Why? Because you've taken 2 losses. Chances are you're not going to win the third trade. All right. Just call it a day and go on to the next session. All right. If you take more than 2 losses, 3 losses, you're then going to just take a 4th trade. And before you know it, you've blown a quarter or maybe even half of your account. And that's not what you want. All right. Over trading leads, over risking, overtrade. They're all linked. It's all negative emotions towards them. So don't do it. All right. You need to be focusing on the positive, that you've been patient, that you're not over risking, you're not over trading, and you're only giving your trade 2 chances. Okay. So we're going to go on to the next where you could lose money, and that is getting FOMO. FOMO. What is FOMO? FOMO is the fear of missing out. What does that mean? I'm on the live stream, I'm trading, and I see my buddy, he's going to take a buy. He took a buy over here. And I don't know why he took that buy, but I mean, he's pretty good. He wins a lot. So I'm going to take that buy, right? In fact, he's so good, I might as well over risk. I might as well put 5% because he doesn't lose that often, right? He's already said we've got a higher probability to come over here. I don't want to miss out on this. I can make some money, right? I can make some money. So I'm going to take this buy. Now, what you see is going to happen is price is going to come down. It's going to stop you out, right? That's FOMO. You had the fear of missing out because someone else was taking that trade. Now, I talked about the psychology in my video, and why people get FOMO is because you didn't want to miss out on the move. You also didn't want to miss out on the money, because what happens when you see a move happen? That's money, right? You're going to make money when that move happens. So now you're thinking, you don't want to miss out on the move. You don't want to miss out on the money. So you took that trade. Now, when you take that loss, you're gonna blame that guy. You're gonna blame other people. Man, you took that trade. He does that every day, and he has an 80% win ratio, and he knows he's gonna lose. So he doesn't over risk. He doesn't over trade, and he sticks to his plan. And you didn't, because you didn't even know why you took that buy. You did it because you didn't want to miss out. Okay, that's FOMO. That's how you're going to lose money in the markets. How to try and eliminate FOMO? Trading plan and understanding the emotions. Okay, FOMO is going to bring you negative emotions. FOMO is going to bring you, when you get FOMO, it's like an itch. You just can't scratch it, right? Okay, you got to treat it like that it's you. If you understand that FOMO is only going to bring more losses to your profits, if you truly want the profits, then you can't be over trading, you can't be over risking, and you can't be getting FOMO. Okay, you need to stick to your plan, stick to your rules about giving your trades a second chance, and you need to know when to call it a day, how much to risk, and how many trades you're going to take per session. Okay, you need to have all of these things in front of you, so you know that you don't want to get these things. Okay, you don't want these things. You don't want to do them. So pretty much FOMO, you need to have a trading plan. You need to understand the strategy that you've tested. So that's what I'm going to talk about as well, because people who have back tested properly, they don't care what other people are doing because they know what they're doing works. Okay. And when you know what something that you do works, okay, you kind of got to put a positive spin that just stick to it because you know it works. All right. And you're not going to have that confidence without the testing phase, which leads me on to the last main way of losing money. We talk about FOMO, and it's people taking trades when there's no volume. Okay, taking trades when price is consolidating. That's how you're going to lose money. If price is consolidating, there's no volume, or if you're trying to take a trade, I don't know, like 7 o'clock in the evening, there's also no volume. All right, everyone's packed up and gone home by that point. Occasionally we do see price move, but look, if you want probable setups, you need to be trading when there's volume, and that includes not trading in a range because there's no volume, because candles are printing side by side. We're not trending. There's no volume in that market. Otherwise, we would be breaking out, and we would be trending. So there's no volume. So don't trade at stupid times. Don't trade at times where there's no volume, and don't trade in the range. So we'll go to type in here, no range, no no, just put no range trading and not bad times. Okay, so don't trade in the range and not trading during bad hours. Okay, so that's pretty much it for how you can lose money on Forex. There's a few other ways, but I mean, these are the main ways and they're all kind of linked. So it's hitting EJ breakup right now. I think EJ should continue moving bullish here. But yeah, so pretty much that's the ways you're gonna lose money in this market. Okay, so if you can focus on all of these things, which I'm going to get onto about how you can start to look at risk, look at all the other things. All right, so yeah, so pretty much that's it for today's video, and we'll see you next time.